This video is not sponsored by any of the companies mentioned. The information provided is for educational purposes only and does not constitute financial advice. Investing carries risks, and it is recommended to do your own research before making any decisions.
Yo, what's up?
Today, I'm going to show you how to set up a trading bot that works for you. If you're new to automated trading, don't sweat it. You're in the right spot. I'm going to walk you through it step by step, and trust me, we're going to make those profits roll in with minimal risk. Let's dive in. First off, pick a solid platform like Binance, KuCoin, or Kraken. For this tutorial, we're going with Binance because it's super chill to use and supports a ton of crypto. Pro tip, always turn on two-factor authentication, 2FA. It's like locking your front door. Extra security never hurt anyone. Alright, now let's generate those API keys. Head over to the platform settings and make sure you enable read and trade permissions. But big rule, don't enable withdrawal permissions. Gotta keep it safe. Next, pick your bot to automate the trading. Some good ones are 3 Commas, CryptoHopper, and Bitscap. These bots will sync with your exchange account using the API keys you just made. Once you pick your bot, connect it to your exchange account using the keys, and boom, you're good to go. Now let's set up the bot with some smart settings to keep things low risk and steady. I recommend going with grid trading if you want a chill, conservative approach. Here's the deal. Set your grid size to 0.5% to 1.5%. Smaller grids make the bot trade more often, but you don't want it going crazy, so keep it under control. Start with a small base order, like $10 to $20 depending on what you're working with. Keep it manageable. Now set 3 to 5 safety orders between 2% and 5% away from your base order. That way, if the market dips, the bot will step in and buy. Set your take profit to 1–2% per trade. You want consistent, smaller wins without risking too much. To protect your capital, set a stop loss at 1–2% below your entry price. This will minimize losses if the market goes sideways. For take profit, set it at 2–3% above your entry price. That way your bot locks in profits before things can turn south. And always aim for a 1–2 risk-to-reward ratio. So you risk 1% to make 2% per trade. Let's take it up a notch with some advanced settings. If you're all about following trends, set your bot to use moving average crossovers. Use a 5-period SMA for short-term and a 50-period SMA for long-term. When the short-term crosses the long-term, the bot's all in. Also, set a trailing stop loss of 1–2% to lock in profits as the market keeps moving in your favor. Some quick tips to avoid mistakes. Never risk more than 1–2% of your total capital on any single trade. And don't go wild with leverage. Keep it around 2x, 3x max. Diversify your assets so you're not putting all your eggs in one basket, and definitely don't overtrade. Limit how often the bot trades to avoid too much exposure. Now let's talk about keeping track of your bot. Monitor its performance regularly. Check things like win rate, number of trades, and overall profit. If the bot's slacking, tweak the grid size, risk settings, or just try a new strategy. And always run back tests to see how your bot would have performed with historical data. Start small, like $100, $500, and scale up as you get more comfortable. Stick to the plan and don't let emotions mess with you. Keep an eye on the market and adjust your strategy as needed. Patience is the real key to winning with automated trading. Now you're all finally set. Go ahead and start setting up your trading bot with these low-risk strategies. Don't forget to like, comment, and subscribe for more tips. Got questions? Hit me up, I got you covered. Tech Crusader.